theme over the last sort of 12 to 18 months. You said that it was, we were in a period of benign macros, then we went into a period where we saw crude prices escalate, and we perhaps have now sort of come back to a period of benign macros with inflation being where it is and where crude prices are. So would you now be specifically more concerned about the micros today?
On the macros, I think if you ask me what would concern me is the level of monetization of the fiscal deficit, which seems to be happening, and that's well above 70%. So that's something which we should keep in mind. And therefore, my sense is the short-end interest rates look benign, but the yield curve in general will be a little steeper than what it has been in the past.
And the repeated demand of an aggressive rate cut by the Reserve Bank, perhaps even a move as far as the CRR is concerned. CII and FICCI both sent in recommendations of a 100 basis point cut. 25 is what we've got. Given the commentary from the RBI and the fact that we've changed stance, the MPC's changed stance, what would your outlook be on interest rates?
I would believe April has one more rate cut, at least.
April has another rate cut.
That's correct.
And in terms of transmission?
I think transmission will happen as we go forward, as deposit rates drop. The only issue with deposit rates is currency in the system. So as cash in the system is going up, the flow of financial deposits has been constrained. And if we have credit growth about 20%, which is what we are seeing in our case, we have to ensure that we also monitor the credit deposit ratios. That means that deposit rate growth also has to be significant. And that is leading us to pay a slightly higher price on getting deposits.
And that is a challenge. So given the fact that you're going to have to try harder to be able to move the deposit rate higher, do you have the capacity then to be able to move on the lending rates?
So we will go by clearly what's our cost of funds and the marginal cost of funds. And I think between now and April, we should see the ability for the banking system to be more moderate on MCLRs.
How do you view this change as far as the RBI is concerned, saying that the proposed move as far as benchmarking is concerned was only a draft move, because one thought that was actually where we were headed. So there seems to be a change of heart. How are you reading that?
I think the move on external benchmarks was linked more to retail lending. And personally, I welcome it. I don't see any issue with that. Let it be of external benchmarks. And each
bank, there seems to now be a pullback on the part of the Reserve Bank. What do you make of that?
But we are comfortable if they even brought it. So from our bank's point of view, we are quite comfortable for them to continue as is or to modify it. And we are comfortable if it is getting modified as well, because finally each bank has to be more efficient on its cost of funds.
Red flags as far as SME lending is concerned, do you anticipate more trouble there? Red flags on the Mudra loan front, which is again something that has been raised, and the performance is inconsistent across various banks. Retail, any red flags emerging in each of these pockets?
I think SME, my view is a lot of the pain is in the system and depends on where each bank is. We at our bank have recognized the pain, and we are quite comfortable growing our SME book from here in a measured manner. On retail, I think one has to watch for unsecured consumer lending, which has been growing at a very fast pace. And I do worry about that as a percentage of any lending book in totality. And unsecured lending, sooner or later, has its own challenges. I personally believe some of these challenges will come in end 2020, early 2021.
End 2020, early 2021. So we still have...
That's correct.
Any way that you believe we'll be able to mitigate that risk?
You got to start managing your risks, your choosing of underwriting, and tightening on underwriting standards on unsecured personal lending now.
Okay. You talked about the fact that you anticipate consolidation, you anticipate a big shakeout in the NBFC space, and it comes back to the question that I've asked you several times over as well. Your role as playing consolidator, given the current environment, do you have the appetite if you don't know the true balance sheet of most things?
Shireen, as you know, we did a major M&A in 2015 when we acquired ING Vysya Bank.
Yeah.
It still happens to be the largest private sector acquisition in banking. Our view is we need a complete deep down view of individual balance sheets before we buy anything which is big.
Have you looked at some?
We look at a lot of things all the time. So we don't like to play blind. We like to see the cards before we quote our number. So once we see that...
Have you quoted a number to anyone?
If we had and we had to make it public, you would have known.
Yeah, not to make it public, but negotiations, have there been negotiations that have been underway? You know the speculation that I'm talking about.
This, we have been living with speculation all the time, as you are aware. And
which is why I'm not naming them, but I know, but you know you're aware of the speculation that I'm talking about.
The issue really is, we are not scared about taking risk, but we want to know what risks we are taking. And once we are comfortable with taking those risks, we will move forward if we get the right value.
What would you be looking at? What would decide whether you go ahead or not?
I think
Of course, you have to have a willing seller as well.
Of course. See, in any consolidation situation in the financial sector, you look at what is the value of the asset you are buying versus the price at which you are buying. Second is that a segment which you may want to strengthen? Therefore, 2 years ago, we bought a small microfinance company called BSS Microfinance, which enabled us growing in the microfinance space. Therefore, is there segments which we think we can get benefits post that acquisition?
Are there segments that you believe you can plug?
All the time. I mean, there are many areas where we could be better than where we are across the whole range of financial services. And the third area is, again, is there enough ownership, is there enough customer base and franchise value which we would get out of that? So these are the three key things: the underlying asset value and the price at which we are getting it. What is it that we get as strengthening of the segments, particular segments which are of interest to us? And third is, what is the franchise value? Has
anyone come calling recently?
No, we have a pretty active M&A team which looks at opportunities all the time. But we like to be careful, selective, and take care of our shareholders' money.
But is the risk-reward ratio looking better today, given where valuations are?
No, it's. I think there has been some correction in the marketplace, so we have to watch the situation.
So I'll end then by asking you, Mr. Kotak, since I said that what you told us in 2018, a lot of that has in fact panned out directionally according to the conversation that we had. As you look into 2019, both the positives and the negatives, what would you have on your radar?
On the positives, I think there is financial sector post a structural change and a frictional change which it is going through. The players who survive will get much stronger and better. So that is one. Two, in the intermediate period, there will be pockets of significant fragility and pain in the Indian financial sector. Three, residential real estate is still a significant challenge. And four, watch out for retail consumer financing unsecured, which will create challenges in 12 to 24 months.
Okay, that doesn't sound very optimistic or very confident. Okay, that's all the red flags that you would watch out for. What would you be confident and optimistic about?
I think people are getting too concerned about elections. Markets don't need to be so worried about elections. We must look through this as a part of a 5-year cycle. And interest rates, short-term interest rates will be softer. Longer term will depend on how well we handle our fiscal and the price of oil. Therefore, short-term interest rates will certainly help the economy. And I think with the post-May government, whatever shape or form it comes, if they take some bold steps on the policy side, India could be in to step up growth from 7% to at least 8% over the next 5 years.
Since you spoke of the elections and you believe that disproportionate amount of time and attention is spent on by the markets on the electoral result and the electoral verdict, but what do you believe is the big concern, the big fear at this point in time?
I think markets are trying to figure out what's the nature of the new government in terms of, is it a coalition government, whichever way it flows, and what are the implications.
Historically, coalition governments haven't necessarily been bad for the markets.
So markets like to worry, and Indians like to worry too much about politics. We should really move.
So if it were to be a coalition government, what would you expect?
I think as long as we have some policy issues which are focused on, and there is an alignment between different political parties on that. Therefore, say the NDA or the UPA, but if you take the NDA and say there is a coalition partnership between the BJP and a few NDA members, as long as there's alignment of what is the way forward, I think things should be okay.
So the Sensex and the Nifty in 2019? I
would, always very difficult to predict, but I would certainly say higher than here.
That's a safe, easy answer. How much higher?
I wish I knew. But,
no, how much ballpark? What's the kind of range?
My feeling is a lot of the pain has happened. I actually am beginning to feel that some of the mid caps may get to be more interesting in sometime in 2019.
Okay, we could see a mid-cap revival of sorts, but watch out for the balance sheets. That's the clear message there coming in from Uday Kotak as he speaks to us on the conference that they have annually every year on chasing growth, what it means for the Indian economy and for the markets. Mr. Kotak, always a pleasure. Thanks very much for discussing a whole host of issues with us. Always a pleasure, and thanks very much for your time.
Thank you, Shane. Thank you.
With that, it is time for us to wrap up the CNBC TV 18 special from all of us here. Goodbye. Many thanks for watching.